Hello and welcome to the Stock Planner channel. Today we're going to go over some trades for next week, and we'll discuss the fact that I track my trade assumptions rather than tracking the actual trades, which I let my broker do. So let's get started. Before we do, I want to tell you that the Stock Planner channel is an education channel. We share our trade ideas, we learn how to swing trade, and we win. Once you learn it, you become a winner for life. The trades presented are my trades. They're not recommendations. You must do your own due diligence. In all actuality, you're probably a better trader than I am. And remember, nobody can predict where the market is going. Now let's get started. Checking out FinBiz and looking at the results for Friday, you can easily see that the stock market was mixed. The Dow ended up a little bit down. The Nasdaq and S&P all ended up down. But in the afternoon, around 2 or 3 o'clock, things started turning around. I can tell you, I tried to day trade the Nasdaq, and early in the morning I went up and then went down. The stock market went down. I didn't go down. I was up, and so I was holding a long position while the stock market went down, and was holding a 3-bagger. Then I had frustration and went down, took a short, and the stock market wobbled around, but I needed to make up the ground that I had lost. The stock market went up, but I'm holding a short. It was only at the end of the day where I took a long for around $100 profit and ended up having a $750 day loss. So day trading is very risky. I prefer swing trading anywhere from 18 to 30 to 40 days out. It's less stress. Anyway, the Nasdaq was a problem for me after having a lot of wins over the last 2 or 3 weeks. Consumer, the big loser, and utilities, the big winner. Energy, after being on the bottom for a while, energy is now had a good day. You can see energy and energy for the month. That's energy for the week. It's pretty low for the week, and definitely the lowest for the month. Maybe energy's turning around. Anyway, it's hard to predict the market. Nobody can predict what's happening next week. When I'm looking for new swing trades, I always go out to the Discord. This is a premium area. There's a small fee to sponsor the channel. And under it, it has several different algos. This is one that the overall trades. And this one's for Friday. We have a buy on BCO, Coca-Cola, and UMPQ. And a short on 8 technology company, and SLM. Anyway, this is a 3 indicator strategy. This is the mean reversion strategy, and this is the gap fill strategy. These are the ones that are most recent on Friday. And this is a summary. And you get that under mobile premium. And I also have a trade list. And you click that and go to the bottom. And you can see the algo call for an entry of short for 8, and so did the summary. The summary had BJ and SLM, and it was calling for some previous scale ends from previous trades, American Airlines, which is working out nicely. It's because they run out of money, but the single's still there. A couple days ago, CCL and XLY. Let's see if these trades are still valid. Well, the first stock we're looking at is 8 on the daily time frame, and you can see this is nice long swings for this stock. This is a software company. My algo says go short. The RSI is overbought and going down, and the MACD is indecisive, but it looks like it's going up a bit. But the big thing is, well, first of all, this is a cheap stock. And it does swing, but it's a cheap stock, so you'll have to buy it or short it. And you can see Morgan Stanley adjusts the price target to be lower, $4. And Wells Fargo is even lower than that. Right now it's at 3. This is price target for a year. So this bodes well for a continuation short. I am probably not going to act on this. It's just too cheap a stock. But for others that are looking for cheap stock, this might be something of interest. The next stock is Coca-Cola, Warren Buffett's favorite stock. This daily time frame, you can see this swings really kind of nice. The algo says long. There's an MACD crossover. It's below the zero line. That's cool. And the RSI is pointing up in the recently. Dividends coming up. I like this for a long. So Coca-Cola might be a long. I did a long bull put spread, and the details are on our premium channel. A bull put spread is you take you short a put and you long a put, and the spread between it is the profit, which is when you sell a credit spread, you'll get $90 in your pocket. You need $500 to put this trade on, but realistically, it'll end up somewhere in here. If it moves, it's 4%, as I'm predicting, 4%. This is your win line. And if it loses, you're going to lose somewhere in this line. When you do spreads, your risk-reward ratio is not so good. But if you manage it using a stop loss, and I list it as the target price is $66, 67, and the stop loss is around 62. This expected move is you have to get them, if you're going to do stock market stuff and swing trading, you need to know what direction, and you need to understand what the expected move of this underlying is. You can do it many different ways. You can use Fibonacci. You can use option calculations, which that's what I use. In other words, what the market is saying the expected move is. Lots of ways, but you need to somehow predict where the stock price is going to go in a certain period of time. And we're saying it's going to go up only 4% in this area here. Not a big move, but hey, that's the idea. What do you think? Is it moving up or is it moving down? Make a comment. The next trade I would like to talk about is stock ticker SLM. This is a finance stock. You can see the nice long trend down and a nice long trend up. We had a bit of a pullback, and one would think that you might be able to go and continue on up as an upward trend. They had an MACD crossover, and that's normally bullish, but it occurred right at the zero line. The RSI is overbought, and my algo singled this short. This is a relatively cheap stock at $15 an hour. Yeah, $15. It's hard to find spreads that are profitable at that lower price. Of course, you could just short the stock itself. 100 shares will cost you $1,500, or you get to do a short call, which is the opposite of a call. Call's normally bullish, but if you sell a call, that's bearish, and your net credit is $68. The estimated margin you need to put on this trade is around $300. But here's the problem with shorting a call: your max loss is infinite. If the price of the stock goes up, you'd be held in the bag. I don't think that's likely in this economy right now. There's some headwinds. We have the credit crunch for the government. We have the war in Ukraine. We have an incompetent government that's not able to solve even the basic problems, address the economy. So I think there's headwinds here. It's not likely. This stock is not likely to go to infinitely. And a 10% increase. This is your profit line here. If it gets you to your exit point of 10%, your target, there's where you can win. You can take this trade at any time. To do this, you're selling a $15 call. And somewhere here is your risk area. That's your stop loss. And this is what you're going to lose, around $77, just at that average. So you're really, if you watch your stop loss, you're really only going to lose $77, not infinite. It's called managing your trade. Again, I have the target price, $13.70, and a stop loss of $16.08. $16.08 right here. About $47 is your average, going to be an average loss. So you're trying to make $47, lose $47, and you're trying to make $66. Expected profit, 64, and expected losses is 49. And that's a risk-reward ratio of 1 to 1.3. It's not great, but it's a pretty cheap stock but you have to manage. Have to manage the trade. EWY, nice swings. This is a South Korea techie type ETF, and you had a down slide the last couple days. The RSI was advancing, and now it's declining, but it's in the oversold condition and about to come around, I think. So is the stochastic, and coming back around. The MACD is pointing down still, but it looks like a crossover soon. I like ETFs. Teladoc, the future of medicine, where you zoom in and online documentation, online doctors. You have nice swings, good steady, great for swing trading. The RSI isn't it oversold? Stochastic oversold, and we don't know when the MACD is going to have a buy signal, but he's looking things that it might reverse soon, and it's at the support levels. And a lot of times it'll take and bounce off the support. I like this trade. Silver had a nice run here, and then some consolidation looks like. And then what it do? It gapped down. When it gaps down like that, I wait a few days and I think it's going to fill. Would fill. The RSI has been on the downside, but it's oversold and about to come around. Same with our stochastic, and the MACD is still pointing down. So it's a little early yet, but I'm watching this. Home Depot. Looks like it's been hanging in a little channel here, not moving much. This time the MACD is saying going up. Stochastic recently said going up, and it looks like the RSI is trying to point up. Is it time to go? Home Depot, like it a lot. Trade it 5-6 times a year. Now everybody wants to talk about Apple. I call that an uptrend. And here, maybe a week or so, a week and a half, we had a short, and it didn't last. Here we had a short, and didn't last. Now the MAC is saying go short. That's some consolidation. That's a note. When it has a consolidation, it's going to move up or down. I know that doesn't help you, but that's when people look for breakouts. But the MACD and the RSI, this is the MACD and the RSI, and the stochastics are all pointing like it's going to be a short little downside. Maybe it will only last 2 or 3 days. Maybe you can figure out how to catch that. I haven't taken a short in Apple, but I have it on my list to do something. What do you think? Is Apple going down or is Apple going up? PayPal. Look at that trend. Nothing. But now we had a jump down. Big gap. I have an algo that's a mean reversion. When it sees that kind of thing, it says it's going to fill that gap and revert back to the mean. This is the mean. Well, at least that's the theory. The RSI, it's not come back around over to 30 yet, but it's about to. Stochastic, same way, and we hope the MACD. But we have no idea if that's support or not. But my algo, the way it's written, thinks it's going to be a pop. Mean reversion play. I have had a lot of luck with mean reversion plays, especially for good stocks. Consolidation, pop up, and then a downslide. I've had a lot of luck with this stock. RSI oversold, stochastic oversold, and the MACD doesn't look like it's stopping. Anyway, I would watch this for a reversal. BTI. Again, my algo picked that up as a mean reversion play. And then the same algo has picked up Uber for a short. MACD says go down. The stochastic RSI says go down. And the RSI. Big drag up and probably a reverse. This is assuming this is the mean. It might get as far down to there, but you can figure halfway, 50% retracement. Anyway, that's all I've got for you as far as new trades, but let's run through some of the previous calls. Now, I don't track my actual trades, but I do track my assumptions. My actual trades are tracked by my broker. They do a good job with lots of statistics and lots of reports. So I don't see another reason to type and do a double entry on the price I paid, to do all kinds of calculations that maintain 2 different accounts when my broker does a good job. But I do like my assumptions, the expected move of the stock that I'm buying, what my rationale was, what strategy I used. and my expected profits and losses for each trade. And from that feed sheet, I can produce all kinds of reports. And these are the trades I've made since 4/17, April 17th, till now. And what I have is the date purchased, the reason, the ticker, expected move. How much do I think the stock is going to move up or down? Of course, the direction of the trade. And how many days out? So I'm expecting the stock to move a certain percentage in a certain amount of days. And my calculated risk, my profit target, and my stop loss. And then it's an easy thing to track to see if this trade is winning or losing. This column is profit and loss if I actually bought the stock, and this was for options. And you can see over here, from those days there, I've won or winning 18 and losing 13, but yet still have a nice profit with the options if things stayed true. That win-loss percentage is around 60%, 58%, whether it's winning or losing. And these are the two trades I actually took on Friday. I didn't do a lot of option trades this week because of the situation with the government shutdown. There's a lot of risk there. And we had some pretty exciting announcements on the PPI, inflation rates, and the jobs. I view stock trading, swing trading, as a battle. This is Napoleon's Waterloo. And I have some trades out there. That's my army. And we have some winning trades and some losing trades. We hope the winning trades are more than the losing trades, but sometimes I'm only shooting for 50%. Right now, if everything wins and loses it, like according to plan here, we'll have $1,000 in our pocket. Now, some of these already have done their job. They've hit the percentage that I said they were going to hit. They hit, and then we had expected profit based on that. So I said Delta Airlines is going to move 6%, and it did move down 6%, and we had around $65 profit, and it's still open. CSX, on the other hand, we said they're going to be short, and it had a $55 profit, and the prediction was correct. Now, the trade could be still open yet, or closed. It could be closed earlier. That's a different story. All I'm tracking is my predictions, whether the battlefield commander is correct. These are the losing trades currently, but there's a lot of open, and it can go the other way. And if you subtract the winning from the losing, you get this number. And these are the new trades, and we're going to come around the flank. And here is some of the trades that recently closed out. My battle plan, with some closed trades and some open trades, and these are the ones that closed out and the results. ARK will go up, and it did. UPS will go up in the next 51 days, and it actually went down. I thought Consumer Staples ETF, XLP, was going to move down by 3%, and it actually moved up. XLK is technology. I thought the price was going to move up by 4%, and it did. AIG, I thought the price was going to move down by 8% in 50 days, and it did. And likewise, Merck, this was a nice trade. I thought the price was going to move down by 7%, and it did. My goal is to have a win rate of 50% or better. These 6 trades had a win rate of 67% and a profit of $378. 2 losers, 4 winners. There is the expectation, expected move, and expected profit. Tracking my assumptions. I'm letting my broker, Interactive Broker, track my actual trades. No use doing it twice. Tracking your assumptions is really important because that'll make you a better trader. Are you tracking your trades or are you tracking your assumptions? Leave a comment below.